First off, if you're buying something for $80,000, guess what? It's now worth it. Okay, that is the market value. The home is worth what you were willing to pay. All right, and welcome in to another episode of CFP Reacts, where I, your host, Scott Schiller, board certified financial planner, reacts to the best and worst financial advice in social media. And I'm so glad that you joined me today. You know, I've seen a ton over the last couple of weeks here regarding the disconnect between information that is being thrown out there and what is reality, right? And that's the purpose of this channel, right? To go through and discuss, you know, what you're seeing out there in social media. And today we're going to be going over a video from Alex Hamazi, very, very popular. This video has over 1 million views, and it's just really interesting stuff. And so I thought it would be a great one for this channel. And so let's go ahead and jump right into it. The title of this video is 10 ways to go from broke to $1 million, okay? So right off the bat, you know, my red flag is up here. This one should be interesting. All right, so let's go ahead and jump into it.
10 different ways that you can make $1 million for little or zero money down. And you can apply this to $1,000, $100, $100 million. You can do any of these things and add or detract the amount of zeros that you feel comfortable with. The first thing that you can do if you want to make $1 million, you can sell something for $1 million. And as crazy as what I'm saying sounds, you absolutely can sell something for $1 million. If you go to an e-commerce store and they're doing $100 million a year, and you say, hey, if I can increase your conversion across your entire site, rewrite your emails, redo your landing pages, and I can get you a 5% lift, can I get 1% of that? So you make them an extra $5 million a year and you get 1. Do you think you can do that?
Okay, first off, you can also get $1 million by just going out on your front porch and it just be sitting in a duffel bag too. You know, that's also possible, of course. But somebody with the ability to be able to pull that off, what he's just describing there, you know, managing someone's, you know, IT networks and revamping their email systems and things like that for big, large corporations. It's going to have a tremendous amount of skill set. A very, very low percentage of people watching this video are going to be able to pull that off. If you can, go ahead and comment in this video below, in my video here, and we'll discuss it. But the idea is that if you are able to pull that off, you most likely are not broke to begin with.
Yes. Why are you going to be able to do so much? Not because of you, but because of who they are. You make $1 million by selling someone else $5 to $10 million of value. And if you're like, I don't know how to do that, that's fine. But accept that you don't know how to do that and then say, I want to learn how to do that, and then go get the skill of doing that, and then you can go sell it. But you can't say that you don't have the money and that's why you can't make money. The second one is that you can borrow $1 million and then buy something and have someone else pay it back. It's fundamentally what real estate is. You borrow money to buy an asset, you put tenants into the asset, they pay off the money that you never had. That is what real estate is. And I'll tell you a quick story on this. So, buddy,
that's one option with real estate. You don't necessarily have to borrow the money. You can use cash or other things to invest into the real estate and purchase it and acquire it. It doesn't necessarily have to come from borrowing. It typically does, though, of course, right? So that's what he's referring to. But if you're taking $1 million and then you have to manage those tenants, you know, and there's fluctuations in the market, there's risk there. And so it's not just as simple as just do it.
Mine got into real estate, was flipping houses, didn't think there was a lot of money in it, was like, oh, this sucks, this is so much work, and there's all this So he ended up buying a 14-unit apartment building with someone else's money. He didn't have any. Bought the apartment building and then sold it 4 months.
Yeah, no bank is gonna give you $1 million worth of loans if you have no money to begin with, right? And this is certainly in this era, 2024, the timing of this video, that's just not doable. Leading up to the 2008 financial crisis, 2005, 2006, 2007, this was in fact possible. You could have absolutely no assets. They call them the ninja loans, right? Ninja, N-I-N-J-A, no income, no assets, no job, and you could get any loan you needed. And this was, of course, possible. Not possible today.
Later for $500,000 more, and he made 500 grand in one transaction. And so then he realized that the more expensive the building he sold, the more money he made. Then he started getting into commercial real estate, which is even more expensive. He's like, wait a second, I can buy something for 10 million, and then I can flip it to somebody for 13 and not even hold on to it for that long. He started flipping 30 or 40 of these a year.
Okay, first off, number one, if you're broke, you're most likely not gonna be able to get a $10 million loan. Second off here, if you're buying the property, the commercial real estate property for 10 million, it is unlikely that you're going to be able to, in a very short period of time, find somebody to be able to buy it back from you for 13 million. I mean, that is a huge return in a short period of time. I don't think that's very realistic. Now, over a long period of time, it's very possible, but the short time frame is what's an issue here for me.
year with just him and a couple of VAs. Number 3 is you refinance something for more than you bought it. So if you're like, but I don't know if they'll do that. They will if it's priced low enough. So if you have to go talk to 1,000 building owners, you will probably get one of them who's willing to depart for their thing for significantly less than it's worth, and a bank will loan the difference and you don't have to put any money down out of pocket. Let's say you have a $100,000 house and you get it under contract for $80,000 from them, saying that they're willing to give you the house for $80,000. And then you say, cool, I can give you 70. And then you got to seller finance me the 10 over the next 5 years. And they say, sure. And now all of a sudden you just got to.
Okay, look at that transaction right there. First off, if you're buying something for 80,000, it was no longer, you think it's worth 100, you're buying it for 80, guess what? It's now worth 80. Okay, that is the market value. A market is a collection of buyers and sellers. And so you're now getting the home is worth 80. That's what the home is worth, what you were willing to pay for it. Okay, and so the idea behind it still being worth 100 would then we'd need to go find somebody, a third party, be willing to pay 100 for it.
At the bank. And the bank finances 80%, and now you actually just made the difference if you wanted to. And you can take that number and you can do it at $100 million, you can do it at any of these levels, but that's the concept. Does that make sense? Number 4 is that you get a contract for something for less than it's worth and then you sell that contract. An option is a contract to say that you will be able to buy something at a future date at a price that is agreed upon today. That's what an option is. If I agree upon a price with somebody today, then I, as the person who's getting the option, is hoping that it is worth more than that. The person who's selling the option is hoping that it's either worth less than that in the future or doesn't think it's gonna change significantly and will just get paid for that tiny option for the contract itself. Let's say you've got $1 million house. Now you call a bunch of houses, you're gonna be offering 20% below what the market rate is that you believe the house is worth. Eventually you're gonna get to somebody who's like, you know what, I've had this house for 30 years, I bought it for $10 and now it's worth 800 grand. You know what, I'll take the 800 grand. You think it's worth more than the 800 grand. And you say, thank you, I'm gonna send you a DocuSign. They sign the DocuSign that you have an option period to flip the house. You could go to a real estate investor and say, hey, I have a house for $900,000 on sale, right? It's worth $1 million. The guy says, okay, sure, I'll sign for 900. This guy's gonna put 900 in, you're gonna pay 800 to this person, and then you make the 100 in between, and you put no money down. The next one you can do.
Okay, flipping houses, and what he just described there is essentially is flipping real estate property, right? Flipping, right? I buy it, and then I turn around and sell it at a higher value. And take the difference, right? Or the spread or the margin of difference there. Flipping houses is hard. Real estate, it's very, very speculative. You know how many people attempt to flip houses to earn income and earn money? A lot. And the number of people that are long-term successful with it is very, very low. Not impossible, but a lot lower than what's being led on here. Is just go ahead and handle it.
Is that you can sell something that's really expensive and get a commission. Sounds really simple. You sell a skyscraper that's a $100 million skyscraper, you'll get 3-4% of that deal. $3 or $4 million on a single transaction. If you sell a $20 million residence, and you might be like, that's crazy. They exist, look on Zillow. The realtor gets 5-ish% of the transaction. That's $1 million and they never own the asset. The next one is that you can.
Yeah, being a realtor is really, really hard. Being a successful real estate agent is tough business. It's not easy, and especially when you start, the higher the price range, the more difficult it becomes. And so if you're out there selling $5 and $10 million properties, number one, you're probably not broke to begin with. If you are, then you need a plan. You need a good certified financial planner, of course, right? Because if you're still broke, right? It's either you have a spending issue or something else going on. But the idea is that you busting into the real estate market and deciding, hey, I'm just gonna go sell $5 and $10 million properties, I don't think is very realistic.
Find somebody who has an audience, buy whatever they're about to launch early, and then sell it later. Now that one does take some money, it's less, but the value of the thing later, that's how it balloons. This is how the entire NFT thing worked, is that you have tremendous demand for a scarce resource, they have the scarce resource, and then it balloons the price because there's so many people bidding against each other to get it. And so getting in early on those types of things, which is why if you buy into something pre-IPO, it tends to almost always go up simply by the fact that there's way more eyeballs that are competing for it, most times. The next one.
Okay, so when he references an IPO, what an IPO stands for is what's called an initial public offering. Okay, it's when a company has decided, a private company has decided it wants to sell a portion of that company or all of that company via shares on the open market to the public. It goes public on an exchange, right? And so that's where you see all those videos of people up on that podium at the New York Stock Exchange ringing the stock market bell, celebrating their company going public. That's what an IPO is. Investing as an unsophisticated investor into IPOs type of stock companies with the intention of the price appreciating in a short period of time is highly speculative, very, very risky. A lot of times it doesn't work out. In fact, most times in IPOs, the people that make money are the insiders, the people that are longtime employees of that private business about to turn public and now turning public, and the underwriters, the investment banks handling the transaction. That's usually who ends up profiting from deals like that. It's not the little investor who's coming along thinking they're gonna get rich quick.
Is selling units of stuff. Super simple, but people don't do the math behind this. I don't even like confining it to a year, but we do live in time, and so I will explain it that way. If you wanted to make $1 million, you've got 52 weeks in a year. About $20,000 a week is what you gotta make. 20 times 52, it's technically $1,040,000 for the internet trolls. How many different ways can you make 20 grand in a week?
If you're making $20,000 a week, you're not broke. In the idea that you're gonna just jump into something that you can earn $20,000 a week, I'd love to hear about it. Put it in the comments of my video here on businesses that somebody, without a very, very specialized skill set can just jump in and make $20,000 a week starting out.
Well, you can sell 20 people a $1,000 thing, 2 people a $10,000 thing, 1 person every 4 weeks an $80,000 thing. On a weekly basis, 20 people who have a $1,000 lifetime value. For example, if you have a $100 a month membership and the person stays for 10 months on average, then if you sell 20 of those every week, over time, those will stack up and then you will cap at $1 million. And the only way to grow from that new million is either you gotta sell more units or you gotta make the thing that you're selling worth more. That's it. The next one is that you can get people to...
Somebody with the ability and skill set to be able to pull that off, which there are people, it's just a low percentage, are not broke. Those are not broke people that are able to do this, okay? If they are, then they have a spending issue or some sort of other budget problem with their personal finances. That takes a very, very specialized skill set to be able to pull off an extraordinary amount of effort and discipline.
Give you their businesses for no money down. A good friend of mine actually did this, and he combined 4 different information businesses into one business, and they were all small businesses. They were all doing about $1 million-ish a year. I get small as relative, but and so he combined them all to be a $4 million top line, $1.5 million bottom line business for no money out of pocket. He literally said, hey, I know you don't want to do this business anymore. Just give it to me and I'll pay you the income that you were gonna make for this business for the next 2 years. And they said, sure. And so he combined all this business.
Sure. Just have my $1 million business. You can just have it and I'll just get $1 million, just get 2 years revenue off that. No, you'd have to find somebody who's retiring. And then again, there's also a lot of risk with that. A lot of businesses are dependent on one person, relationships, things like that. There's a tremendous amount of business risk in what he's describing here. Not impossible, but a lot higher risk than what he's leading on.
Businesses together, and then overnight he owned an asset that was doing $1.5 million a year in profit and $4 million in top line, and it cost him nothing to do it. He owns the asset now, and so if he turned around and went to say, hey, I'm going to go sell this, he could probably sell the thing for $5 million put together. It might cost him $2 million, and he makes the 3. He made more than $1 million with no money out of pocket. Understand that the people who are making money don't constrain themselves by time. They're not thinking, how do I make X dollars per hour, X dollars per year? They're thinking, how do I provide the most value to somebody so they'll give me a percentage of the value I provide? Here's another one.
All right, I'd agree with that, but also there would be a tremendous amount of effort and time and energy put in to maintaining those businesses, to combining them and keeping them going, and keeping the profitability levels at least even.
Is that you can go find stuff that you really like and go promote that. So you don't have to go find and make your own products. You go find products that you really like from other companies and just become affiliates of those products. And the nice thing is that I just recommend you be honest. Be like, hey, I tried 100 fucking different soaps. This is my favorite one, and here's why. People don't want to go through the time and the money of figuring out which soap is the best for your audience. And if you make the rec after you do that, they're like, oh, well, shoot, he just saved me time. And so then I'll go buy from him through his link or whatever. And so you can affiliate other people's products and make money in that way without any money out of pocket. And then finally,
if you have an audience that's big enough to be able to sell another company's product, number one, it probably took you money to get there, okay? That wasn't free. And then number 2, again, you're probably not broke. If you have a big enough audience to be able to go in and take, let's say, Coca-Cola as an example, and sell it to your audience and take the difference, you already have a thriving business on your hands already, right? You're most likely not broke.
Arbitrage in general, which is a fancy word, but it just means that you sell the same thing between two different markets because they're priced differently. If Bitcoin is $19,000 in Japan, on the Japanese market it's $19,100 in the US market, you buy the $19,000 Bitcoin over in Japan and you sell it in the American market for $19,100 and you make $100. That's all arbitrage is. And it happens with physical products, it happens with lending money between two parties. If you can get money for 1% and you can sell the money for 6%, you make 5 is the difference. All of these are different versions of arbitrage, which is just same thing, two markets, two different prices, you make the difference. And so if you're looking...
Right, and he is describing arbitrage correctly there. The difference, the thing would be is in that example, right? The 19,000 in Japan, selling it here in the US for the 19,100 and pocketing the $100, you're not gonna earn that $100. There's a transaction fee involved, okay, number one. Number two, there's going to be a currency, an exchange rate between the Japanese currency and the US currency, right? And so that would be another factor of risk in doing what's called index arbitrage. So I buy a stock or a security or an investment and on one index, and then I turn around and go to a different exchange, let's say in a different country, or bring it back to the United States and sell it here on an exchange here and take that difference. It would take, number one, a tremendous amount of risk and a lot of working capital to earn $1 million doing index arbitrage or something like a cryptocurrency Bitcoin arbitrage. So anyway, I'll stop there. I hope everyone enjoyed this video. This one was a fun one for me. A lot of stuff, a lot of good information in here, and I hope everyone enjoyed my reaction to this one. This was 10 ways to go from broke to $1 million. And again, in conclusion, this is all get rich quick stuff, right? The real way to get to $1 million, number one, have a plan. Number two, stay disciplined and execute that plan so it'll actually work for you. And then invest and take time. You need time on your side to grow money over a long period, and that way you can get up to $1 million. That way, I think is a lot more realistic than what is being shown here. But anyway, please like and subscribe to my channel, and in the comments below, let me know what you think of my video here. If you agree, disagree, if you like any of the 10, and also if you have any other videos or topics that you'd like me to react to, I will go ahead and get the job done for you. So thank you so much for tuning in, and I will see you in the next video.